Live. Uh-oh. That's some funny shit. That was some funny shit. What the fuck? Well, this is fun. Hey, Brendan, how you doing? Michael Sinclair, ladies and gentlemen, introducing the amazing James. Yeah, thanks. Having an issue here. Let's try this again. Huh. I can't get to it. Well, this isn't going to be any fun. Fucking thing. Get out of here. Really? Well, no, that's not right. All right. This isn't going to be any fun at all. Nope, that sure shit ain't it. Hey, how you guys doing? I'm having a little bit of issue with my software. Damn it. Damn it. Damn it. Okay, so if that's popping up there, why can't I get this thing freaking smaller? All right, let's see if I can start it again. Okay, give me a second, guys. I'm trying to figure this damn thing out. And I got all these people sitting here waiting for me. And I still can't get to it. Damn it. Oh, fucking shit. How is it this damn thing is in my way? How can I sign up? All right, you gotta chill for a little bit while I try to figure this damn thing out. Because if without me figuring this out, I'm not going to be able to broadcast tonight, which is a little weird. No, I need to figure out that thingy right there. How the fuck do I move that? Taskbar settings. Widgets, text bar, blah, blah, blah. Apps, blah, 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 blah. Privacy, security, access, blah, blah, blah. Personalized taskbar. I want the fucking thing to go away. Oh, fun. Fun, fun. What is that? I have no idea what that is. No, what the fuck? I have no idea what the fuck I'm doing. Isn't that funny? Shit. Item search box. That didn't do shit. All right, you guys are gonna have to give me a second or two. Fuck. Give me 1 second. Hey, Julie. Julie. Fuck. I gotta figure this damn thing out. Hey, Chloe. Chloe loves blue. Hi. Well, that sure as shit didn't help any. Fuck. I have no idea how to get this damn thing out of here. Anyone possibly able to bless me with a small... Oh, come on, don't do that. Ask a teenager. Yeah, if I had one handy. Saying hi to people. Hey, how you guys doing? Sorry, I'm having a little bit of technical issue. Hey, Larry Purcell, how you doing? Sharik, is that right? Sharayuki. Cool name. Stock market is 400 years. Okay, Larry, that's funny. Open new desktop. It's not the desktop. I'm trying to get rid of the icons down here. Because see, when I log into OBS, I can't get to the little thingy right down to the bottom. Hold on, if I move it up. See, I move it up. See right there? I got to get to that right there. When I let go of this, it disappears. And I can't get the cursor down there low enough. So how the hell do I get rid of this thing? Still holding Mike at 91. How come no one has taken my shares yet? 71 premium every week. Hey, you get Pakaris, you're getting a premium every week. I don't know what you're looking for. How do I sign up? We're going to talk about that in a little bit. More likes, track, yep, all that kind of nice. Take your time, James. The real subscribers will still be here. Thanks. I've never had a problem with before. You know what I really hate more than anything? When people fix something that ain't broken. Now, the other day, I didn't have this issue. Or last night, I didn't have this issue. But Microsoft, or whoever the hell did an upgrade on the software, now I got this freaking thing here that I can't get rid of. Open new desktop. It's not the desktop. Okay, so once you get rid of all that stuff, I still can't get to the bottom. Making this thing smaller. See, it'll go side to side, but it won't go higher and lower. There we go. What a freaking idiot. Well, that did it. Alrighty then. I feel a little inept. Anyway, let's get to some of these questions I missed. Sorry guys for the minor glitch. It's my own damn fault. I had 200. Now I'm down to 100. Is what it is. All right, so let's take some of these questions. Get started. Larry, how's it going? Sharika. Pakaris, you're still holding on to Nike. Well, let's take a look at Nike and see what's going on there. NKE. Now, Nike's at 74. Okay, hold on a second. Pakaris, if you bought Nike at 71, well, it's at 74 now. So why are you still holding it? That's my question. Okay, so you bought it at 71. 71's down here. Now it's at 74.86. Okay, that's for you, Pakaris. Take your time. Real subscribers, okay. All right. Good evening, James. Tech is great when it works. You're absolutely right. Larry Purcell. I'm having more luck making money just watching you swear. All right, that works for me. Darzik, how you doing? What are you trying to do? We can help. All right, Cars, I figured it out. Okay, so I had to make the whole thing smaller and then move. All right, anyway, I got to figure it out. You learn something new every day. All right, you got it fixed. Yes, I did. All right, as a teenager, ask a teenager, yep. All right, take more of these questions. Okay, taskbar, yep. Taskbar, just signed up. Cool beans, we got a new signer-upper. What the hell do you call that? I gotta come across a good snappy name for the people in the morning trading group. The morning trading group doesn't sound sexy at all. 1%ers, ooh. How can I use right click on the bar? Yeah, I tried that one. Taskbar settings, yeah, I tried that also. Task guide behaviors, yeah. Auto hide. Oh, didn't even know there's such a thing called auto hide. Read that fine. Yeah. OMG, someone make him scroll down. All right. Missed the question. Is there a class action lawsuit against? Wait, whoa. What the hell is that? Class action lawsuit against Walgreens. I don't know anything. Anybody else hear anything about that? All right, let's take a gander. All right. That's my question. Why is no one exercising Nike? I'm getting the premium, but shares are still there. So you're getting money every week. Let me see if I get this right. Hold on a second. I got to change this. I got to change the view here so that we can read it properly, so everyone can see. Okay, so let me see if I understand this correctly. You bought it at 81. It's currently at 84, and it sounds like you're complaining that you're getting money every week. Is that about right? They haven't bought it. Now flip screen. Yep, got that. Hey, brother, can we take a look at JE? Oh my God, Matthew, are you related to that guy from last night, JEPQ and JEPI? We did that last night, and it's like, do we really want to do this again? Because last night, JEPQ is a no, JEPI is a no, always has been and always will be. JEPQ is paying, what, 7%, and the other one's paying 9%? Or is it 5% and 7%? I forget. And they're both monthlies. So I haven't gone over the rules yet, and you're relatively new here. So let me see if I can go over the disclaimers and the rules at the same time. All right, so I forgot my intro. Dun, 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 dun. Hey everyone, this is James from Dividend Stock Talk. Brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, looking for that safe, predictable, consistent 1% per week. So how do I do that? Well, in 2008, my 9-year-old daughter came up to me and asked me if I would teach her how to trade, because that's what Daddy was doing. Daddy was trading on stock markets, and she wanted to learn how to do the same thing. So here's the challenge. How do you teach a 9-year-old who's not a Mensa student how to trade stocks? Well, I had a list of criteria that I had to overcome. But with my first name, Drazik. Drazik, give me a second. I'm going to get to that in a minute, right? So my 9-year-old wanted to learn. So here's the scenario. 9 years old. So it has to be simple, safe, predictable, consistent, and here's the biggie. You ready? No way for her to lose. Now, what happens if a 9-year-old little girl starts crying? Well, Daddy's going to feel really unhappy about that, and that's going to be bad, because when that starts, Mom gets involved. When Mom gets involved, guess what? The couch really is comfortable, but we're not going to tell people that. You know where I'm going with it. So it had to be safe, simple, predictable, and no way that she could lose. Okay, great, fine, dandy. Came up with 5 rules to help that situation out. Really not that difficult. Rule number 1, never buy something you do not want to hold long term, because you just might have to. Now, I've been trading for over 20 years. The longest I've ever held anything is 9 months. And that was Kimberly Clark last year. I bought it, she dropped, came back up, finally sold for a profit. But here's the thing. While I had it for those 9 months, I collected 3 dividends and over 20 premiums. So that by the time she went down, came back up, I was still looking at a profit off of it. So that's what I'm looking for. I'm looking for safe, predictable, consistent 1% per week. So back to the rules. Rule number 1, never buy something you don't want to hold long term. Rule number 2, never sell at a loss. It kind of defeats the purpose of the whole game. And don't think that this ain't a game. It kind of is. It's like Monopoly. But if I can get 1% a week playing Monopoly with the stock market, I'm all for it. All right. Rule number 3, make sure the company has increased dividends. Unless you really, really, really love going through quarterly reports, annual reports, and a fine-tooth comb through all the fundamentals and all that crap, the simplest and easiest way to figure out if a company is doing a good job without all that fanfare and crap, look at the dividends. The dividends are a portion of the corporate profits paid out to the investors. That's you and me. When we buy and sell stocks, we become the investors, the shareholders, whatever you want to call it. It is what it is. If you own company shares or stock in a company, you are part of the ownership of that company. Great. So dividends will tell you how consistently profitable the company is. Now, I don't know about you, but for me, if I'm going to invest my own personal money, I want to make sure it's into a company that has historical performance of being profitable consistently. Okay? Now, I'm past the point in life where I'm looking for capital appreciation. I'm not looking for this thing, for it to be low and then for it to go up and then, no, I'm not looking for capital appreciation. Sorry, I'm looking for cash flow. 1% a week, it's all I'm looking for. Now, 1% a week comes to over 50% per year. So whether you're building your portfolio or just living off the profits or living off the interest of your portfolio, wherever you are, don't think this is anything other than simple, safe, predictable way to get 1% per week. Now, it does take some time and some effort. The reason why I say this is James from Dividend Stock Talk. Dividend Stock Talk, brought to you by the 10-Minute Trader. It was a trading strategy I created for my 9-year-old daughter. So let's get back to it. Never buy something you don't want to hold long term. Never sell at a loss. Make sure the company has consistent increased dividends. It's just the quickest, simplest way to figure out if they're a good, profitable, consistent company. That's what I'm looking for. Okay. Weekly options. Well, I want weekly cash flow. I cannot get that with anything other than something that I can buy on a Monday and it expires on a Friday. every single week, week after week after week. I can't do that with monthly, so please, before you suggest anything, make sure, number one, it has dividends and it increases consistently, and it at least has weekly options, because weekly options allows me to do this every single week. Now, I know some people are going to suggest some piece of crap like VOO, JEPQ, JEPI, or any one of those ETFs that pays out a monthly dividend. Hey, they're all happy about that. Great. But you're not looking at the numbers. Numbers do not lie. So let's start picking on JEPQ. Wait a minute. Let's go finish the rules first. Okay. Never buy something you don't want to hold long term. Never sell at a loss. Consistent increased dividends. Quickest way to find out if they're profitable. Weekly options. We want weekly cash flow. And then make sure the numbers work. What do I mean by the numbers? Well, here we go. If I'm buying something, okay, we're looking at Nike at the moment. The last traded price was $74.86. The bid $74.80. The ask $74.99. Great. If I'm buying it tomorrow morning, $74.99 is what I'm paying for it, based on the numbers we're looking at the moment. Now, these numbers change as soon as the market opens, and they constantly change. However, the math never changes. What am I buying it for? What am I selling it for? What's my profit? Okay, simple. What am I buying it for? What am I selling it for? What's my profit? Now, considering this is going to be weird. Is today Tuesday or Wednesday? Today's Wednesday, isn't it? This is not good. Wait a second. Wednesday. It is Wednesday. Holy cow. So tomorrow's Thursday. So we're not going to be looking at this week's options. The reason why we're not going to be looking at this week's options, well, because we only have 2 days left. There's never any value in a 2-day mint. Well, there is sometimes, but not normally. So we're not going to be looking at the expiration for this Friday. We're going to look at next week's expiration. Okay? So that way it gives us some time value. So 2 days is not really, in my humble opinion. That's why I do most of my trading on Monday and Tuesday. Wednesday, it's just kind of, checks and balances. How's it look? Is it okay? Great, wonderful, let's move on. So, that being said, I don't really want to look at this week's. I want to look at next week's, only because the valuation. Live restricted for some audiences. Your live contains themes that some may find uncomfortable and has been restricted. Reasons violate community guidelines. Cool. Well, that's new. I always love getting one of those. My live does not contain any content mentioned in that notice. Live visibility restricted for 10 minutes. Your live is not eligible for recommendations and restricted in search results for the next 10 minutes because you may have promoted a brand, product, or service. The restriction will be removed once you turn on consent disclosure setting. Turn on. All right, disclose live content. It's my own brand. Continue. Well, that was interesting. I'm not quite sure if you guys caught what just happened. I just got a red flag warning, and they wanted me to do some weird stuff. Anyway, that was weird. Anyway, okay. I missed all those questions, so I got to go back quite a bit, don't I? Holy cow. I was being reprimanded. Auto hide. All right, we passed that one. Passed that. We passed that. We passed that. My question was Nike. Okay, Picaris. I have no idea why they haven't bought them out yet. But if you're continuing getting profit, hey, it's all good. Everybody can take. Okay, so there I was picking on Matthew. Okay, JEPQ, no. JEPI, no. VOO, no. Yet any one of those ETFs is going to be a no. That's a no. Thank you, Bamarad. Redneck. Okay. Hey, so can we get a 1% path if we join your club? Okay, Manny, I'm not 100% sure what you mean by that. Okay? Now, I'm going to look for more questions from you, Manny, specifically, because I'm kind of interested in what you want to know about that. What software are you using? All right, MK. This is not software. This is actually a trading platform from Thinkorswim, which is part of Charles Schwab. So if you want to use it, it's a downloadable version. You can download it onto your laptop or your desktop computer. Okay. I love all the perks that it has. It's got the calendars. It's got the chart. Because every chart you can think of, you can do stocks, forex. I don't know if you can do cryptocurrency here, but you can do a lot of stuff here. Minty Fresh, SPG. Let's finish up with Nike first, and then we'll take a look at SPG before I pick on JEPQ and JEPI. I don't know why everybody wants to pick on those every single day, because it is what it is. Surly family, you like that rule number 2? Never sell at a loss. What is the perk? Explain to me. Now, someone said once, all right, take the small loss, and then you can jump into something else. So you have what's called missed opportunity losses. Okay, I get that. But it's just something about looking at the spreadsheet and seeing the negatives that bothers me. Okay? I don't mind if the positives are smaller, but it's kind of uplifting. Why would I want to take a look? It messes with my head. You know, why would I jump into something and then be okay with taking a loss? No, I don't. I just never take a loss. So last year when Target went from 135 down to 102, I'm thinking, oh, this hurts, but I can't get rid of it because then I would be a hypocrite, and I don't want to be a hypocrite. So when I say never take a loss, never take a loss. Eventually, Target went back up. I got out at a profit. Okay, fine, dandy. But I think, a very, very small profit, because when it did jump up, it jumped up so much, it took away almost all my profits. All right. SPG. Let's finish up with Nike first. Okay, so as I'm saying, you mentioned something about still having Nike after buying it at 71 and selling the call and nobody bought you out yet. Well, sometimes that happens. Okay, but if you're at 71 and it's at almost 75, okay, you got to take a profit somewhere. I'm not telling you to sell. I'm just saying it's not a profit until you take it. And if it's there, and you're not locked in with a covered call, then I'm not seeing the issue here. But anyway, I could be wrong. All right. Yeah, see where she was? She dropped down. Here's the 30-day bottom, 1, 2. I would have jumped in probably here, because I like 2 days to the upside before I jump in. All right, so I'm not going to say, hey, I know how to pick bottom. I don't. I see where a bottom is, and then I like 2 days to the upside. Okay, if the bottom's here, 2 days to the upside, 1, 2. Okay, then I would most likely jumped in either this day or this day, depending on what things look like during the day. The Searles family, yeah, I bought at 71, at 74. Why the hell are the shares still there? I mean, it's good, but weird. Okay, I get it. Minty Fresh, you want to take a look at DOC, D-O-C? Never even heard of it. And usually, when I say I've never even heard of it, that's usually a bad sign. For you, well, not for me. Yeah, it's a no. Okay, when I say weekly options, and here you're giving me something that has monthly options, it's a no. It's all right. Has to have consistent gains and pay weekly. No. Searles family has to have consistent gains and have weekly options available, not weekly dividend. Because you got to remember the terminology, because you really can lose a lot of money by saying the wrong thing at the wrong time. Call your broker. Yeah, I want to, buy a bunch of DOC, then I want to buy some August calls. And it's like all of a sudden, you're losing big time. You got to get the terminology correct. Okay, we're looking to have for the company to have consistent gains, which means they're consistently paying more and more money to their investors. That's us. Okay, if they're profitable, I want them on my list. Okay, so 20 years of increased dividends, yeah. Weekly options, great. There's about 300 companies. 300. I always have something to choose from. And if I'm looking for that 1% a week, hey, I'm always good. All right. Mark Sherman, Gross Law Firm, taking the case against WBA. Okay, that's interesting. I mean, we could do some research on it and find out why and what they're doing. All right, Drazik, I'm going to come over here and answer your questions now. I will sign up but need to use E-Trade. We'll try to follow. I don't know why you'd want to use E-Trade as opposed to Charles Schwab. Don't get me wrong. Not that I'm a fan of Charles Schwab. I really do like, because you're going to find E-Trade doesn't have a few things. I don't know if they have if they have a calendar. Okay. Do they have a calendar to show you all the neat fun stuff? Fun stuff like, let's go. let's go with here. All right, here's the dividends in green. Here's the earnings reports. Conference calls, all scheduled out. Splits, who's splitting? Nobody's splitting this week. An economic day event, no one. Futures liquidation, nope, 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 nope. ETF dividend, nope. But I like dividends, okay? If you like earnings, here's your earnings right here. And then you can figure out which companies I like. Well, here's Goldman Sachs. Here's McDonald's. CKH, I don't know who that one is. Nucor, AGNC, Verizon, Bank of America, Morgan Stanley, U.S. Bank, Johnson & Johnson, Delta Airlines. Okay, it tells you where all the earnings are, and if you like doing earnings plays, great. But we saw one yesterday. We did. The earnings were bad, but the stock went up. Why is that? Don't know, don't care. I just don't pay attention to earnings because they're not as consistent as the dividends. Now, I've been doing this for over 15 years, so I noticed what happens and what doesn't happen. And then I'm down to a point where it's like, it's so simple, so easy, why not? All right. You guys are lucky that I should, I feel compelled to share my information, and they're just making it easier for me to share. All right. La, 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 la. Okay, so I just talking about E-Trade with Drazik over here. You need a case to keep up with the group. Okay, you shouldn't be that difficult because it's all basically the same, even though I don't know anything about E-Trade. All right. Okay, but yeah, covered calls are easy. You can do this anywhere. All right, not a problem. Drazik, what I'm going to suggest is you really need to talk to a tax strategist or tax planner. If you're planning on moving, great. But first, talk to a tax planner, tax strategist to make sure you don't have to pay taxes on your gains. All right? Then set up your account in a manner in which you can do that. All right. See, my advice was for you to seek out professional advice. That's the only advice I give. My suggestion, great idea. Go talk to a professional tax planner or tax strategist. How can I trade, make lots of money, and not have to pay taxes on it? I came up with this really cool idea. All right. Now it's a really cool idea, but it's sick and twisted. Okay. So I was thinking, give up your U.S. citizenship, right? Go down to the southern border, sneak on in, claim asylum, and then ask for all the money that the federal government is giving away. Great. Now you're a resident alien, and now you can apply for a resident alien trading account, and you don't have to pay taxes on that either. It's just, it's sick and twisted how twisted the actual game can become. Not that I would ever do that, I'm just saying you could. Larry, have you ever dumped a stock just to get out? And yes, I know the 5 rules. Unfortunately, yes, I did many times in the past. But nowadays, I'm fortunate enough to be in a position where I have a stock, if it goes down, that I can just let it sit there and sell covered calls against it until it waits and decides to go back up. All right, Prakash, you're asking a question? Uh-oh, I have to go back because I didn't get that question. Oh, yeah, I get it. All right. We are going to take a look at WBA. It's one of those ones we look at all the time. Love it. Covered calls plus dividend. Your time is very much appreciated explaining your logic. Matthew, you're welcome. See, if anything you get from this, the number one thing I want you to get is, does it make sense? Don't listen to a word I'm saying. Do the research yourself. Do you like, you've heard of MasterCard. Let's take a look right here. The 9th of July, MasterCard. Do you know who MasterCard is? Okay? You know that I'm saying that it's on my list for a reason. Okay, it's been in business for a long period of time. It's got name recognition. They've consistently increased their dividends. Fine, great, wonderful. Don't believe a damn word I say. Go check it up yourself. Look for the dividend kings, the dividend aristocrats, the dividend champions, the dividend contenders, and then squeeze in Warren Buffett's list. That's 5 good lists to go by. Forget everything else. If you're going to look for, all right, think it through logically, okay? Now, you get someone like Warren Buffett. Everybody knows who he is. Great. Just for the fun of it, hold on 1 second. I'm going to pull up Warren Buffett's stock list. All right. Here's Warren Buffett's stock list, okay? Now, I'm going to read them, and you let me know which one of these you do not like, and then give me a good reason why you don't like it. Up at the top, we have American Express, Bristol Myers Squibb. Hold on. American Express, Bristol Myers Squibb, Globe Life, MasterCard, Verizon, AbbVie, Procter & Gamble, Bank Mellon, Ally Bank, Aon, and DHI. If these, okay, now there's more to the list, but these are the ones I'm showing you at the moment. If these stocks are good enough for Warren Buffett, well, that's good enough for me, because the man has paid his dues, and we all know who he is, and we all know that he don't buy crap. So, hypothetically speaking, if it's good enough for Warren Buffett, it's good enough for me, and I never double check anything on his list. Okay, that's his particular list, okay? And that's just for the month of July. Month of August, whole different set of stocks. Month of September, whole different set of stocks. But anyway, month by month by month, I look at his list, what he has. And when they're getting ready to pay a dividend, and then the chart is telling me it's the right time to buy it, well, hell yeah, I'm going to buy it. If the timing is right and the numbers work. You got to remember those. The timing right, numbers work. Okay, stuff like that. I have no idea where I was going after that. Oh, so anyway, yeah, I forgot where I was going with that conversation. Oh, it's because you were swearing. All right. Manny, you're saying no. And I'm going to apologize, Manny, because I forget what you're saying no to. Now, here's my excuse, Manny. You ready? I got a YouTube channel here, Facebook channel there, Instagram channel here, and TikTok right here. So I'm getting questions here, and no questions from Facebook yet. I don't know what's wrong with those people. But anyway, the questions come so often, it's like I'm carrying on like 8 to 10 to 12 different conversations all at the same time, but I forgot what our conversation was. You're saying no to something, and I forget what it was. Sorry. Thanks for that, Manny. Thanks for the rose, Manny. All right, Jackson, W. What the heck is W? I'm not quite sure what does W mean. Uh-oh, I missed a bunch. If you hit the screen wrong, the questions all just disappear. Okay, we're going to take a look at Walgreens in a bit. All right. Going WC. What is a weekly option? Oh, cool. A newcomer. I can tell as a newcomer with a question like that. Not insulting you or anything, but a question like that basically tells me you're a newcomer. There's nothing wrong with that. It's wonderful. Welcome to the show. Okay, what is a weekly option? There aren't any weekly options. I don't know where you got that impression. Okay, what I mean when I say I trade dividend stocks for weekly cash flow, okay, it's not the dividends that are weekly. It is the stock options that are weekly. See, what I'm pointing at is the option chain. 2 August 24, that's this Friday. 9 August 24, that's next Friday. 16 August 24, that's the third Friday off. Okay, so when it says weekly cash flow, we are using dividend stocks as an indicator to tell us what companies are paying a dividend and when, because those companies have a tendency to go up in value just before the dividend. So if I take dividend stocks, a good dividend stocks that consistently increase its profits, and I take that together with when they're paying their dividend and couple it with weekly options, if I see that a stock is going up and everything is telling me it's going up, and they have a dividend coming up. Well, that's 3 reasons why to buy it. Number 1, dividends coming up a couple weeks. Great, I like dividends. Reason number 2, well, I forget where I'm going with this train of thought. Damn, I hate getting old. Anyway, I like to have the odds and probabilities in my favor. Okay, so the calendars tell me when a company's paying a dividend. Great. Now, every green dot you see, that's Warren Buffett's list. This is my list of 100-year-old companies, or close to being 100 years old. But each green dot represents when they pay their dividend. Okay, so if a stock goes up in value just before the dividend, and then I use that date in order to tell me when to start looking at the chart, because the chart will tell me whether it's the right time to buy, because we don't want to buy at a high, all right, because that's just waiting for it to go higher to a place where it's never been. Okay, this is not, Aladdin, take me to places I've never seen. No. This is a place where it's never been before, so I don't buy at the high. I like it when she's at a high and then she comes down due to profit taking. Now, don't kid yourself. I'm an investor, you're an investor. If I buy a stock and it starts going up in value and I see a 10% gain in a couple of days, well, yeah, I'm going to sell because I want part of that gain, because it's not a profit until you take it. Okay, until you take a profit. I heard from somebody today, they said they bought a certain stock at $80 and now it's at 160. I'm thinking to myself, what the hell are you waiting for? It ain't a profit until you take it. Look at right here. See the stock runs up? Great, it's at 18. Wonderful. You don't take your profit, boom. Now it's down 16.50. But wait, she's going up. Now she's at 18 again. Wonderful. You don't take your profit, boom. Now she drops down to 16 again. Now she shoots all the way up to here to 18 and a quarter. You don't take your profit, boom. It calls down. It ain't a profit until you take it. If you like a good stock, great. Buy it, grab the profit, say thank you very much, but keep your eye on it. Keep it in your merry-go-round, your Rolodex, your revolving door, whatever you want to call it, your roster. I have a roster of stocks, about 300 of them. I look twice a day. Tonight, at night, when I'm sharing this with you guys, and in the morning in my live morning trading group. That's a live morning trading group. We're there to make money. Monday and Tuesday, we do all our trades. Wednesday, Thursday, we're just looking to see how our trades, it's kind of like babysitting. Think about it that way. We're babysitting. All right, well, what did AT&T do today? Well, this is what they did. Great. How does that affect my situation? Positive, negative. And then we take that information and then we move on to the next one. I look at the exact same stocks every 90 days. Why? Because you have 4 quarters. Most stocks pay every quarter, okay, 4 times a year. So great, there's 66 trading days and a quarter. So if AT&T is paying day 1 of the quarter, great, I can take that profit, wonderful. Well, now I got 65 days left to go. What the hell am I supposed to do then? I already got my profit. Hell with it, let's buy something else. Here's an idea. Okay, the month of July. First week of July, Cardinal Health, Comcast, American Express, Bristol-Myers Squibb, Cisco, General Dynamics, JP Morgan, Lennar. Great, let's pick one of them. Wonderful. We get our 1% for the week. Great. Now we're back into cash the next Monday. What do we have next? MasterCard, General Mills, AT&T, Verizon, General Electric. Ooh, come on, you got to tell me one of those halfway decent. Great, we'll buy another one. We'll get another 1%. Okay, next week, what are we looking at? Procter & Gamble, AbbVie, Abbott Labs, Hormel, PNC. Wonderful, I love those companies. Let's pick one. Great, we'll get 1%. Look at this, 1%, 2%, 3%. Now look at this week. Bank Mellon, Caterpillar, Lowe's, Pfizer. I like them all. I only need one a week to get 1% per week. Now, normally, 98% of all my money is invested at all times. So I get 1% of 98% of whatever my money is. Great, I live comfortably off of that. All right? And if you're not, retired, you're not spending that money. Hey, what's up, man? How's it going? Someone, welcome back again. So you've got to figure out what stocks are in your roster, okay? I like the Dividend Kings. I like the Dividend Aristocrats. The Dividend Kings. Here we go. Look. AbbVie, Abbott Labs, Hormel, Lowe's, Colgate, Palmolive, Procter & Gamble. Those are Dividend Kings. Party Spring, what's happening? Those companies have increased their dividends for more than 5 decades. Well, they're on my list. Why the hell aren't they on your list? Okay, if a company has increased its dividends, which means, in short, right to the point, cut the BS, right to the point, they're consistently profitable. If you keep giving someone money and you give them more money every single year, well, you must be doing something right. That's the way I look at it. If you're consistently profitable, you're consistently giving higher and higher payments to the shareholders, well, great, you must be profitable. I want a piece of that action. Is that too much to ask? I mean, I've worked 40, 50 years of my life. I've been working since I was 13. It's time for me to retire. Take my little bit of chunk of change, my little bit of money, get 1% per week, covers all my bills. I'm good to go. So let's take a look at a couple more. So there is no such thing as a weekly option. It's weekly. Wait a minute. Yeah. What is a weekly option? Holy shit. I wasn't ready for that question. It was what was a weekly dividend? No such thing as a weekly dividend, but there are weekly options. So here's the thing. A weekly option is something that expires every 7 days. So we have an option for this week. There's certain stocks that have them and certain stocks that don't. If you need to know who has weekly options, you can go to the CBOE.com, Chicago Board of Options Exchange. Okay, CBOE.com, and you can put right in the search bar, weekly dividend stock. Dividend stocks that have weekly options. And it'll give you the whole list of all the weekly options that are available. And then, do they pay a dividend? Do they increase? And then you have to go through them one at a time and find out, hey, what are the good ones, what are the bad ones? Go from there. Okay, Flipper, you want to take a look at, what's that? That is, don't tell me, Citigroup. I like Citigroup. And Citigroup is going to be a no. Or should I say, Citigroup is going to be a not this week. Sorry, not this week. Not a no, because I do like Citigroup. Not this week. Okay, the reason why I'm saying that, okay, first thing you want to take a look at, before you even look at the numbers, a quick check. It only takes 2 or 3 seconds. Yeah, 2 or 3 seconds. High, low, where was it? Where is it? Where is it going? All right, see where the high is right here? See where the price is right now? That's too close to the high for me. I don't do the thing. You know what the thing is? That's why I buy it at the high and wait for it to go higher. Yeah, no thanks. Shailendra, what a lovely name. How are you, Shailendra, over here on Facebook? Gonna apologize for the camera because it's having a difficult time signing in with one of my other accounts. Sorry. Anyway, so that's what a weekly option is. A weekly option gives you the right, not the obligation to do something. So if I like Citigroup, an option is nothing more or less than an agreement, a contract between you and the option buyer. We are option sellers, which means if I buy a stock, I can sell somebody the right to buy the stock from me at a certain price by a certain date. That is called an option. There are call options and put options. There are weekly options that expire every Friday. They actually expire on Saturday, and I don't know why they say Friday, because you can't do anything on Saturday. So every Friday, a weekly option will expire. Okay, 2 August, 9 August, 16 August, 23 August, 30 August, 6 September, blah, 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 blah. Okay, every 7 days. Now, monthly options expire the 3rd Friday of the month. Okay, and you can only do it once a month. I don't like those because you only do it once a month, which means only 12 checks per year. No thanks. I prefer weekly options because weekly options give me 1 check per week, 52 per year. And that, if I average 1% with each transaction, okay, that's 52% a year or more, depending on the numbers. When I say the numbers, what am I buying it for? What am I selling it for? What is the premium? And what's my rate of return? If the numbers work, great. Then I might move over to the chart. I want to see 5 things on the chart. The high, the low, where was it? Whoops, where was it? Where is it? And where is it going? Okay? High, low, where was it? Where is it? And which direction is it going? That's what I want to see. And then if I like it, I'm going to zoom on into the 90 days. Well, this is what it looks like last 90 days, which is 3 months. Okay, I'm looking at high, low, where was it, where is it, what direction is it going? And then I'm looking for a pattern. Okay, up, down, up, down, up, down, up, down, up. Okay, so you see how far apart it is? That's 90 days. That's like almost a month to get up to here, a month to fall, and then a month to retrace. Okay, it's just like a couple of big moves. 1, 2, 3, 4. That's it. So where's it going next? That's for the 90 day. Some of them have more activity. Now, next I want to see the 30 days, because the 30 days will give me an idea of where it's going now and where is it going to be by Friday or by next Friday. Because I only want, ideally, to be in the stock for 5 days. Buy it on a Monday, get out on Friday, and do the whole thing over again with a new stock. Because I got 300 of them that I have to buy and sell in a 90-day period. Because each quarter is 90 days. January, February, March. First quarter. April, May, June. Second quarter. July, August, September. Third quarter. October, November, December. Fourth quarter. We are currently in the last day of the first month of the third quarter of 2024. It gets a little confusing, but no, we're into the third quarter. Or we can call it week number 31 for the year, because week number 31 for the year, week number 5 for the third quarter. You know, a lot of weird things, but no, it's a freaking July 31st, 2024. That's what it is. But how does it qualify throughout the month? Okay, anyway. I want to figure, what can I buy it for? What can I sell it for? What am I getting in return? What's my ROI? Shows up, down, up, down, up. Well, it should, hypothetically, continue to go on the upside. It should, because you get your bottom down here. Okay? 30-day top, bottom, your 30-day bottom's way over here. That's going to disappear tomorrow. Because every 30 days, the clock moves and moves and moves and moves. So for the last 30 days, your 30-day high was 2 weeks ago. Well, here's the bottom, and here's the retracement right here. Up, down, up, down. Hypothetically, it should go up tomorrow. Hypothetically. But I don't look for daily moves. I look for weekly moves. So where's it going to be by Friday? Rick Finney, dude, you got to give me a buzz. You got my number. I know you do. Nice to see you there, Rick. Anyway, don't take it personally, Rick, but I got Facebook, Instagram, YouTube, and TikTok all going at the same time. So, got my number. Send me a text, dude. Let's see how you're doing. So anyway, up, down, blah, 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 blah. That's what we're looking for. Okay? Now, if I'm going to buy Citigroup at this moment in time, first number is 65.39, what I can buy it for tomorrow. What is the closest strike price to that? Well, that's going to be the 65. Well, the 65 is selling for 82 cents per share, but not really, because if I'm buying it at 65.39 and I'm selling for 65, well, I'm losing 39 cents right at the top. That's going to come from somewhere. So you take that 39 cents and you subtract it from the premium that you're collecting. And by the time you do that, well, you're into the 40s. In the end, that's not worth it, because there are too many other companies that are paying better. Trying to figure out why my screen just got dark. I noticed my computer wasn't plugged in. There we go. All right, so more questions. Manny, the 1% thing earlier I meant as a joke. Forget about it. All right, Manny, no problem. All right, Brian, keep an eye on Merck. Getting hammered the last few days. Good candidate for the next week, I bet. Ooh, Brian, let's take a look at it. I love taking advantage of bad news. Holy cow, I love something like that. Uh-oh, why isn't that working? Okay, she's plugged in. All right. So let's take a mark. I like situations like that. First thing I want to see, high, low. Wait a minute, high, low. Where was it? Where is it? And what direction is it going? Well, what's there? She tanked here. There's got to be something going on there. Now, if one of you guys in the audience want to take a look over the next couple of days and find out what kind of news caused this, we can jump in and keep our eye on this. Because what's good about this? Well, number one, it's Merck. Okay, now I'm pretty sure we all heard of Merck. But the big drop is going to be a reason for that. Now, we haven't seen that price since January. Okay, so all those gains just got taken away. Wonderful. So, is it an opportunity? Well, let's take a look. First and foremost, once we looked at the chart, it's intriguing enough to get my interest that I want to look at it again. So here's what we're looking for. First thing I'm looking for is what can I buy it for tomorrow? 113.23. Great. The 113s, I'm losing 23 cents. You take the 23 cents off that 168. Well, that's more than 1%. Great, that works for me. So now let's take a look at the numbers on the chart. Okay, a year ago, 106.95. Why is the screen so damn dark? That ain't it. That ain't it either. What the hell did I just do? I don't want that either. Oh, settings. Yes, I did. Settings right there. Screen, screen, screen. It's not giving me the screen. Damn it. All right. I'll just have to deal with it. It's a little bit on the gray side. It's tough for me to see. So anyway, let's take a closer look at it, okay? A year ago, she's at 106. She bottomed out in the middle of October at 98.76. Topped out at 135. Okay, great. So let's take a look at the last 90 days. Okay. Well, that's not 90 days. $90 days would be right about there. Okay. Last 90 days. It's channel. Look at channel right like that. Between 126 and 130. Yeah, somewhere in that area. But for some strange reason from here, she makes a big drop. That, I want to find out what that was. As soon as it finds its bottom, okay, and turns back around, well, of course she's going to go back up. Haven't seen those numbers since December. There's got to be a reason for it. All right, last 30 days. Yeah, look at that channel. Okay. Down, up, down, up, down, up, down. Yeah, we're gonna write that. Gonna write that down. Merck. MRK. You know, it's terrible if you can't read your own writing. And what does that say? I can't read my own writing. All right. So, Brian, we're going to keep our eye on Merck. Thanks for the tip. We'll take a look at it for the next couple of weeks until we find this bottom here. Once we find this bottom there, if someone could do a little bit of research to find out why this happened, was this just an earnings report scenario? Was that it? Could be. Okay, we don't really know, but Merck is on my list somewhere. Okay, but it's a not today. It's a let's keep our eye on it. Once she finds the bottom, figures out what this mess was, how it affects the company, because most of the time it's news driven, and news driven crap is, you know, it's fleeting. Ooh, that's a good word. It's fleeting. It's not here for stay. Picaris, no issue, just weird. I'm happy. Alrighty. All right. Minty fresh. Spaghetti. You want to take a look at spaghetti? Ooh, Josh wants to take a look at Apple. Let's look at spaghetti first. SPG. SPG. That's a no. Come on, Minty Fresh. You've been here long enough. You know that I don't like monthlies. Okay? Okay? Come on now. You've been here long enough. You know this. I've seen your name plenty of times. I could give it up for someone else, but you should know better. AAPL. Apple. Now, you do realize Apple is not on my personal list because they do not have 20 years of increased dividends. They do have dividends, but not nearly enough for me to take notice. The only reason why I like Apple is because it's on Warren Buffett's list. The drop was from earnings yesterday. All right, thanks, 86. So, I like that idea because whether the earnings are positive or not is totally irrelevant. Okay? Just because the earnings weren't good doesn't mean something's wrong with the company. Well, business as usual. How long does it take to get over a bad earnings report? Well, it depends on who they are and it depends on how it affects it. Now, when the market maker pushes that information down, let's go back to that for a second. MRK. See that? Interesting. Okay, so let's pull up the chart over here. Get rid of this. Now, remember how we told you about the market maker and how he manipulates stuff? Well, if the average volume, so look at the chart. Okay, we got our highs, our lows, all that crap. Red days are down days, green days are up days, blah, blah, blah. The blue line's down here. Those represent the average volume traded on a daily basis. So business as usual, we're looking at 12.5 million shares. Okay, so if you have, what is the bid and the ask for, Mark? That definitely can't be right. That's a 24. Can you imagine if that was right? Look at the distance. 112.99, 113.23. The difference between the bid and the ask is what is called the spread. The spread, that is the profit for the market maker. He's the one who's doing the buying and the selling. That's his job. That's his only job. He buys and he sells. If it's listed for this price, that's what you're going to buy it for. If it's listed for that price, that's what you're going to sell it for. He or she is the one who makes up that decision. Okay, fine. But here's the thing. The spread, the difference between the bid and the ask is 23 cents, 24 cents a share. What does that mean? That probably doesn't mean anything to you. But here, let's check this out. This is going to freak you out. Oh my goodness, where are you? I hate the new setup, really do. Let's go back to where we were, right here. Okay, now, if we have an average of, was it 7.5 million shares traded on a daily basis? Okay, and we said that the spread was 24 cents. Oh, come on. All right, we said the spread was 24 cents, and we said the average volume is 7.5 million. So 24 cents multiplied by 7.5 million. What does that come up to? Well, look at that. The market maker makes an average of $1.8 million a day. A day, see it? $1.8 million a day of that volume. What happened when he got that news? Well, from 7.5 million, it traded at 35 million. Okay, so we're going to take the same 24 cents and multiply it by, what was that number again? 35,700,000. 35,700,000. So normally the market maker makes 1.8 million. But if the market maker gets some juicy news, okay, now explain to me the difference. Wednesday, Tuesday, Monday. Monday morning, okay? Monday morning, Susie comes in, she unlocks the door, she sits at the phones, and she answers the phones. George comes in, he mops the floors. Okay, Jake and Tom, they come in and they take care of level 4 of the bill, whatever. You have all these workers coming to work every single day. Middle management, lower management, custodial, all that crap. So what happened from Monday to Tuesday? Did the CEO call him up and say, hey, our stock just dropped, don't come into work today? It doesn't mean absolutely nothing. This is nothing more than the public's perception of what we think it is worth. Got nothing to do with the daily business of the company. The people are still coming in, clocking in, and doing their 40 hours a week for the company. This information right here doesn't mean squat other than the fact. Okay, I can't see your screen with too small eyes. It'd be nice, blah, 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 blah. Okay, more speaking clear. Sorry about that. The screen here behind me, now you're on YouTube. You could go to YouTube and look at the other live. I have 2 lives right now on YouTube. One, you're seeing with me standing in front of the screen. The other one, the second one, is just the screen alone. And the reason for just the screen alone is so that you can see the numbers. That's why I have broadcasting on YouTube live with 2 different channels. One, me standing in front, and 2 is just the screen itself, so that people can watch it on their big screen TV, on their computer, their laptop, whatever. But you really can't see these little tiny numbers on your phones. All right, if you're on a phone or a tablet or some kind of mobile device, you can't see these numbers. That's why this whole screen behind me is live on YouTube. All right? All right, Lori, where can I find the best dividend stock list? Lori, you ready? Google. Here we go. Got a pencil and paper? You're going to go to Google, and first thing you're going to look for, Dividend Kings List 2024. It's going to give you 54 companies that have increased their dividends for 50, that's 5 decades, 50 consecutive years or more. There's some companies that paid over 60 years of increased dividends, 70 years of increased dividends. Yeah, that's a great place to start. Next list, Dividend Aristocrats List 2024, Dividend Champions List 2024, Dividend Contenders List 2024, Warren Buffett's Stock List 2024. Those 5 lists right there will give you close to 300 companies that are consistently profitable and consistently increase their dividends. Okay, now there's 5,998 different companies all paying, all doing business that you can invest in anytime you want. 9,598. That's a lot of companies to choose from. Okay, why is it I only look at 300? Well, there's only 300 of them that consistently increase their dividends every single year for 20 years or more and have weekly options. So I, the greedy old me, gets a weekly check from whatever I invest in. Okay? Hopefully that answers that question. High of what? The Jones Brothers. All right, so let's get out of this one. It's a little depressing to find out how much money the market makers actually make. It's kind of ridiculous, but hey, that's their job. You could take this job and shove. I ain't working here no more. All right, MRK. So that's MRK. Great. The Jones Brothers. Now, I look at four different charts. I look at the 1-year chart, gives me an overview of seeing what the companies are. You know what? Let's do this so you get a better idea of what I'm looking for. Okay, here's Merck. Here's the 1-year chart. Okay, a year ago today, 266 trading days in between. Okay, very first thing you see is the high way up there, the low way down here. Where was it a year ago? Way over here. Where is it now? Right here. And what direction is it going? Well, from here, currently, it looks like it's going down. Okay, it's the first 5 things. That's the 1-year chart. Okay, so it's not an all-time high, not an all-time low. Great. Let's move on to the 90. 90 days ago was the end of May. Okay, 90 days, first thing. High, low. Where was it? Where is it? What direction is it going? Going to the downside. Okay? Are there any big, huge, noticeable patterns? Yes, there is. 2 weeks, 2 weeks, 2 weeks, 3 weeks, 2 weeks, 3 weeks, 2 weeks. No, wait, 1 week. 2 weeks. See how it moves? Up, down, up, down, up, down. How much time between every high and low? That pattern is different than the other one we looked at. Each one is different, but we're still looking for 5 things. High, low, where was it, where is it, and where is it going? Last 30 days kind of really ties it into exactly what's happening right now. Well, she's basically been channeling. And look at 1 day up, 2 days down. 1 day up, 2 days down. 1 day, 2 days up, 4 days up. Yeah, so look at the movement. Up, down, up, down, up, down. This is what I want to find out. This has to do with earnings, great. If it only has to do with earnings, eventually it's going to recover back to where it's supposed to be in this channel here. So at 113, that might be kind of cheap. So more than likely, that's going to go back to the upside. Now, maybe not tomorrow, but maybe the next day. But I would like to keep an eye on it to see where it finds the bottom, turns around, goes back up. Because that's what they do. They find a bottom. David Moon, how you doing there, David? How you doing? So once it finds its bottom, turns around, goes back up, that's where I want to buy it. Okay, don't get me wrong. I like Mark. It's on my list. Well, it's on my list, but now it's under my magnifying glass because as soon as she finds that bottom, great, I want to see what the numbers are. What can I buy it for? What can I sell it for? What's my rate of return for the week? Great, that's what I want to know. Okay, so I'll be looking at this tomorrow, the next day, so on, until we isolate where the bottom is. Now, we kept our eye on Walgreens for what, 5 or 6 months, waiting for it to find its bottom. It finally did. Okay, and some of us are making out halfway decently with Walgreens. All right, use blah, 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 the EX date. Stock decreases by the dividend amount. Usually, prices increase weeks before you sell. Okay, nice going there, Bo. Pretty right on. All right, Mr. Bruner, how are you today? Bakaris, can you explain implied volatility? Does it affect you? Absolutely not. Okay, remember now, Bakaris, you've been here long enough. You know. Okay, you over anyone else, well, you over a lot of people that are here, know that this was created for a 9-year-old. I don't know how you were when you were 9, flighty, you know? So it has to be simple. Once you get into applied volatility, once you get into the Greeks, the delta, the vega, the theta, the rho, all that kind of crap, it gets confusing. Okay, this is why I don't do puts, I don't do implied volatility, I don't do delta, I don't do theta, I don't do any of that stuff. Simple, predictable, consistent, that's what we're looking for. Simple, how often has the company increased their dividends? Great, wonderful. Predictable, if I'm buying it at this price, selling this is my rate of return. Wonderful, consistent, well, they do it every 90 days. That's what I'm looking for. So I don't do implied volatility at all. That's the IV implied volatility. No, not at all. Mara is looking tasty. Well, CP, let's take a look at it. Now, I do own some Mara because I saw an opportunity on it a while ago and I took advantage of it. Now, there's a few people here that probably jumped into Mara also. Not that I recommended it. It's just that first thing I want to see, the high, the low, where is it, what direction it's going? Great. I want to take a look. I want to take a deeper look. The numbers. 1985. I remember 1985. Wow. That was fun. Anyway, 1985. The closest one's going to be the 1950 or the 20s. I'm going to look at the 20s because another 15 cents, not a problem. I like Mara. Okay, so at 20, it's paying $1.15. $1.15. So let's do a little bit of math here, and you're going to be a little bit amazed at what this comes out as. All right, so if my profit's going to be $1.15. Now, I know I'm on YouTube, and when I enlarge, I can still see... I missed that. I still can't see any of the information or the company you are looking at. Huh. Maybe you need bigger TV. Perfect opportunity to get to that 80-inch TV hanging in the dining room. I have no idea what to tell you. But there was a reason why I have this on YouTube. And eventually, as my little enterprise, I don't know if you guys know, but my little enterprise grows, I'll get a cameraman, and when I point, they'll be able to zoom into it. Until then, you know, we're still at the beginning of this. I've only started recording in January, so I'm still relatively new. So as life progresses, okay, I will upgrade. All right, let's get back to the example we're looking at. Marathon, 1985, the 20s are going for 115. Great. But if 115 is my profit, and I'm paying $19.85 a share, right? What is my rate of return for the week? Did you see that number? 5.79%. What does the stock need to do? It needs to go above 20 by the end of the week. Okay, maybe it will, maybe it won't. That's that trade. Now, if I look at the 1950, whoops, I don't want to do that. The 1950 is going for 131, right? 1950 is going for 131, but I'm losing 35 cents right off the top. See it? Okay, if I'm buying it 1985, I'm selling it for 1950, I'm losing 35 cents. Okay, well, subtract 35 cents from this. 35 cents from $1.31 is going to be 96 cents. So I'm walking away with a 96-cent profit. Now, I know some of you guys are thinking, well, 96 cents is not a lot of money. That's per share. So for every share you buy, you're getting a 96-cent profit. Well, it doesn't mean anything until you know what kind of rate of return it is. Okay, so if my profit is 96 cents, okay, if it's 96 cents, well, what's my rate of return? To figure out the rate of return, you got to divide your profit by what you paid for it. Well, I'm paying $19.85, but I've already taken the 35 cents out of the $19.85, so I'm going to use $19.50 because I've already subtracted the 35 cents. So my profit is 96 cents divided by 19.50, because that's the strike price I just sold. Now, that's a 4.9% profit. Okay, 4.9 for 1 week. And what does the stock have to do? Well, it's got to stay above 19.50. Well, at this moment in time, it's at 19.85. That's above 19.50. Let's go one more in. Let's go to the 19. The 19 is going for $1.58. Okay, so $1.58. This is going to get a little more complicated because the number's bigger. So $1.58 is my profit. See it over there? Where is it? Right there. Okay, $1.58 is my profit. But if I buy it at $19.85 and I sell it at $19, I'm losing 85 cents. So I got to take 85 cents off of this profit here. So I'm going to subtract 0.85, and that's going to be my profit, 73 cents per share. Well, what does that come to for a rate of return? Well, now I got to divide it by 19 because that's the price I'm selling it for. That's 3.8%. But here's the thing. When we are now two strikes in the money, it's a higher probability of being cashed out because the stock has to drop all the way down to 19. Okay? You know what? Let's do an actual trade with this one so you can see what it looks like. So we already know I'm going to do the 19s. So let's get rid of this. And we're going to change from single to covered call to covered stock. Okay? And then we're going to buy the 19s. Here's the 19 right here. Okay? The purchase price, $19.85. The strike price, $19. Okay? So that is $18.27. All right. So as you can see, when I clicked on that, it automatically fills the order. Now, I have it usually fill at 1,000 shares, but the math is still the exact same, and the rate of return is the exact same, whether you get 1 share or whether you get 1,000 shares. Okay, 1% is 1%. 5% is 5%. Say whether it's 1 share, it's still 1% of 1 share. If it's 1,000 shares, it's still 1%. Did you day this company marathon, or did I hear wrong? I have no idea. I gotta look at that one again because it. All right. Did you day this company, Marathon Oil Company, or did I hear you wrong? We didn't say anything about Marathon today. Now, we did Marathon a couple of weeks ago, and then we did Mara. So there's 2 different companies, Marathon and Marathon. All right, anyway, let's stick to what we're talking about at the moment. Okay, so we're looking at doing the 19 trade. It's a double trade. What does that mean? That means I'm buying the stock and selling the option at the exact same time. Okay, so come on all the way over here to the left. to the left to the bottom. Instead of day. Yeah, all right. All the way to the left, you get down here where it says covered, which means you own the stock, you're selling the option. Great. Well, I'm buying 1,000 shares of the stock, and I'm selling 10 contracts. So it's 100 shares for each contract. So 2 contracts, 200 shares. 10 contracts, 1,000 shares, so on and so forth. All right. So it's marathon. We already talked about that. 9 August 24, because we didn't like the numbers for this week, so we're going to go to next week. Okay. The $19 call strike, that's what we talked about. Okay, now I want to do send, confirm and send. Just hit it once. You hit it twice, that sends it automatically. All right, so now I'm going to read the trade. Buy 10 covered calls for Mara. 100, those are the weeklies. 9 August 24, that's next Friday. Okay, it's like 8 or 10 days. The $19 call strike at the limit order to open. Why does it say to open? Because there's 2 trades. I'm buying the stock, that's one trade. I'm selling the option, that's the second trade. Now eventually, you need to close both orders. Well, the first one, the stock, that will stay open until you sell the stock. The option will expire that Friday. What Friday was that? The 9th. In a week and a half. Okay, next Friday, that's going to expire, and that will close that order. But eventually, you got to close the stock order. So you get 2 orders: open, close, open, close. Okay, same thing. All right. So underneath that is my break even. Are you seeing this right? $18.14. Well, the stock is currently at $19.85. So anything over $18.14 is going to be a profit. That's basically what it's saying. My break even is $18.14. Okay, for this particular trade, the profit is $860. Well, great. Let's do a little bit of math. There we go. All right, so let's get rid of this. Maximum profit, $860. Great. Now I divide that by my investment. My investment in this particular example is $18,146. Okay, fine. Divide that by 18,146. And it's going to give me a grand total of 4.7% trade. That is freaking awesome. 2 strikes in the money, and it's still giving me 4.7. I could go 3 strikes, 5 strikes in the money. The further in the money I go, let's get rid of this. Okay, so we know what the numbers are. Lovely. Let's get rid of that. Let's get rid of that. Let's get rid of this. Let's get rid of this. Okay, so as I'm saying over here on the option chain, all right, at the moment in time, 1985. Well, the 1950 is at the money. That one gives you the highest rate of return without the stock having to go up. The 20 will give you a higher return, well, because the stock goes up and you collect some appreciation. I like to look at the safe point. Let's say the stock doesn't move at all and stays exactly where it is. So the 1950 was going to give us that nice fat premium. Okay, the 19, less premium, more security. The 1850, less return, more security. So the further up you go, the 18, the 1750, the 17, the further up you go, your profit gets less and less. But what increases? The safety of the trade. Now, we're looking at marathon. Okay, last 90 days, we see that up, down, up, down, up, down, up, down, blah, 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 blah. The 90-day bottom is 1758. The 90-day top is 2734. Okay, great. Last 30 days. Okay, that's plain to say. Okay, 30 days ago, she went up. She comes down on the 10th of July for the bottom of the 30-day period, 1878. Okay, 5 days later, we're at the high, 2730. Now, just because it's a high, count the numbers. Okay, 1878 to 2735. That's like an $8.50 move or a $9 move. a $9 move on a $19 stock, that's about 45% in a week. If you think for 1 second, going from 19 bucks to 27, that's a $9 increase. That's almost 50% increase in a week. If you think there's not going to be profit taking, you got another thing coming, because you're at 27, then she drops and drops and drops and drops. Now she's at 1967. Well, that's pretty damn close to the 30-day bottom. So once it stops, turns around, goes back up, yeah, I want to jump on that pony and take it for a little ride. Okay? Now, we've been keeping our eye on Mara since January, I think, or February. So we get a good, comfortable feel for where it is. And where do I have to guess? I got to guess the next 4 or 5 days. Well, next Friday, that's 7 days. Okay. It looks as if she should come back down, turn around and start going back up by next Friday. I have no problem whatsoever doing the 19s on this one. But we don't know if this is the bottom or if she's going to come down further. That's why we look at it every day. All right. Let's move on. Yeah, CP, Mara, good pick. All right, Zoc. Zoc, serve. Wait a second. Did I look at serve once before? Yeah, come on, dude, really? 86 is here. Wait, name change. Cool beans. Yeah, we looked at Merck. Nah, BMY is about to run. Bristol Myers Squibb, huh? BMY. I'm not quite seeing what you're seeing, dude. Okay? Name change? Okay. First thing I want to see is that the high, low, where was it? Where is it? Where's it going? Yeah, see this right here? That does not tell me it's going on a run. The only run I see in this one is a run to the downside. Let me explain. Okay? All right. First of all, 47.55. The 48's going for 64. Okay, that's over 1%. Great. Even the 47's close to 2%. No. Sorry. No, over 1%. All right. Okay, the high of the year, 63.36. Bottom 39.30. All right, last 90 days. All right, first thing I want to see, the high, the low, where is it, what direction it's going? Yeah, that baby's coming down. That's the run I see. That's the 90-day. And here's the 30-day. Okay, I honestly don't know what you're seeing, because I'm not seeing it. Back over this side. Okay? 30 days ago we're at 41. She drops down to 39.50. That's the bottom right there. Oh crap, you guys can't see this on YouTube. That's the bottom right there. And she shoots up, pulls back, shoots up, pulls back, shoots up, and gaps up. Yeah, the only thing I see this gap filling right here. And look at the profit from 39 to 51. Okay? 39, 49, that's 10, 12 bucks. Wait, is that right? 12 bucks on $38 stock? That's, wait a minute. 30. That's a big jump. Wait a minute. 39 to 49 is $10, $11. So it's $11 movement on a $39 stock. That's over 25%. That's a big move. So if you think a 25% move from here to there, and there's not going to be profit taken, yeah, I don't want to take any advice from you. Sorry, dude. I see profit taken. I do. You get a big gap up. Okay, 3 days to the downside already. I don't see how you could possibly think. It could. It could stop right there and keep going up. It actually could. But unless something big is happening, now Bristol Myers Squibb's been around for 100 years. Do you really think that they're creating something new and interesting? I don't see it. But I do like the company. But I don't see it as a buy this week, personally. But that's me. What do I know? SMCI. Oh, I don't really want to do SMCI. All right. Super micro, because it's always going to be a no. And the reason why, come on, I hate this crap. Like, change everything I look at. All right. SMCI. Okay, so I'm over at Yahoo Finance now. Here's Yahoo Finance, and we're going to look into SMCI. All right. First and foremost, they don't have dividends. Are you kidding me? They don't have dividends. Why are we looking at it? Sorry. SMCI is a no. Sorry. CP. The implied volatility of stocks under review will part determine place its option price. So yes, I don't pay attention to that. Thanks for the help this morning, Richard. Not a problem. That's what we're here for. Uh-oh. I missed some questions. Paul. New here. I sell weekly calls. With this, do you buy and hold, or are you in and out around the EX date? Paul, you're exactly right. I look at the EX date. I buy 2 weeks before the EX date. I do the covered call against it, get my 1% premium, and I'm out of there. Can we get Mara? I already looked at Mara. Mara reports tomorrow. Okay. Paula Kennedy's back again. Hey, Paula. Rick Finney's on the other side. Rick Finney, Paula Kennedy's here. I don't know if you guys remember each other, but any of the kids I went to school with. All right. That being said, doesn't the stock go down by the dividend each EX date? Paul, you're absolutely correct, but that happens after the EX date. Now, see, we're jumping in 2 weeks before the EX date because 2 weeks before the EX date, the stock has a tendency to go up. And when the stock goes up, and we jump in and we get that small little percentage of movement, so all I'm looking for is 1% per week. 1% per week comes to 50% per year. So that's what I'm looking for. I'm looking for a good dividend stock. When is the EX date? Great. Jump in, get my little bit of profit, jump out, see you again in 90 days. Because the stock pays a dividend every 90 days. So why would I not look at it every 90 days? I mean, I like certain stocks and I look at them all the time just so I can follow them. You're welcome, Paul. Inherently more risk than in that line of business. I'm not quite sure. What trading platform is this? Thinkorswim, you're correct. When you first started, how much did you start your account with? I think it was like $1,200. But you're talking back in the 80s. No, sorry. 80s or 90s, somewhere in there. Do you account for transaction fees? Yes, I do. Now, Big Drew, you're lucky you're getting started in this game now. Because when I got started in the game, it was 125 in, 125 out. That's $250 going to the brokers right there. Now we're down to what? Free transactions? You only pay the institution fee? Yeah. We already looked at Mara. Dirt Nap Angel. How's it going there, everybody? Gabe, we already looked at Mara. Sorry. Mara doesn't pay dividends. Yep, I'm aware of that. Certain stocks we do get exceptions. It doesn't hurt, but it's an exception he makes. Yeah, there's certain stocks we have exceptions for. Sterling. Felix, how are you doing there, dude? All right, keep on going, keep on going, keep on going. John, cool beans. Badfish wants to take a look at Clorox. CLX. Clorox just so happens to be another dividend king. They've been in business for over 100 years. Okay, I love companies that have been in business for over 100 years and consistently increase their dividends. What does that tell me? It means that must be doing something right. You know, if they're doing something right, great. Oh, do not gamble. You're back again, dude, and you're going to hit me up with, I'm not even going to acknowledge that one. Uh-oh, I missed a lot of these questions. All right. Boleslaw. Hi. What returns do I get? About 1% a week. That comes to over 50% per year. Do you disclose that? Sure do. As a matter of fact, Boleslaw, I actually have my accounts available online for people to gander. All right, here we go. All right, it's going to pop up. Hold on a second. Oh, there we go. The 10-minute trader. Yay! All right, so anyway, slide on down. It says right here, current trades for 2024. Okay, view all. Click on that. What you're going to see, Boleslaw, is all the way down here. Every single week, my trades. Look, it's week 14, first week, second quarter. Week 15, second week, second quarter, all the way down to the first week of the year. Here we go, right here. Okay, click on any one. It opens up and tells you the exact trade that I made this year. Macy's, General Motors, Ford, CVS. That's week 1, which was January 2nd. Oh, wait a second. You can even check right over here. See right over here? January 2, 2024. January 2, 2024. Covered. It tells you how many positions there was. It tells you what the purchase price was. It tells you what the profit is. So roughly, week number 1, I made 2.12%. Week number 1. Week number 2, 1.3%. Macy's, Ford, General Motors, Clorox. Oh, imagine that. Look at that. I bought Clorox. And we were just looking at Clorox. Lowe's and Ford. Yep, but they're all there. Okay? Here's all the trades every single week between January, the beginning of January, to currently. Not quite currently because we're in week 31. I haven't uploaded week 30 yet. See, week 29. Look at that, 2.26%. Walgreens, Series, Southwest Airlines, Wells Fargo, and Macy's. That was not last week, the week before last. Okay, what did I make the week before last? 2.26%. Yay for me. Okay, so I say average is 1% per week. Let's go back to where we were. Okay, here we are. Okay, so we were just looking at Clorox. 135 is what the current price is. The 135 is going for 285. Sweet. Okay, gotta love it. 285. That's more than 1%. That's what we're looking for. Safe, predictable, consistent 1%. The company's over 100 years old. They've consistently increased their dividends to their profits. What does that mean? That means for more than 20 consecutive years, they're profitable every single year because every year they give more and more and more money to their investors. Well, that's a yes for me. That's the kind of company I like. Those are the kind of companies I like. I get about 300 of them in my roster. I will look at Clorox once every 90 days. And if everything looks good, I'll buy it. So first thing I want to look at is the high, the low, where was it, where is it, what direction is it going? First. Okay, it takes 2 or 3 seconds to notice that. Well, that's what it's doing. Great. That makes me want to look at it a little deeper. Okay, so the high of the year, okay, back in the beginning of August last year, 169.26. That's the high of the year for Clorox. Okay, the low of the year, 114.80. So in my head, 114, 169. That's the distance, 114, 169. That's what we, the buyers and sellers, think the value of Clorox is this year. We know where the low is. We know where the high is. Great. What does that mean to me right at the moment? Well, nothing really. So let's go into the last 90 days. Okay, last 90 days. High, low, where was it, where is it, what direction, blah, blah, blah. Okay, the high was 144. That was back 90 days ago, the beginning of May. Towards the end of May, 127.49 was the bottom. Okay, look at how much movement there was. Not a whole heck of a lot. Down, up, down, up, down, up, down, up, down. So we're on to the upside at this moment in time. So last 30 days is the biggie for me. Last 30 days gives me an idea of where it's going in the next 3 to 5 days. That's all I need to know. Okay, I need to know if I'm buying it tomorrow morning, more than likely, where is it going to be? Well, by looking at the buying habits. Okay, dropped, up, down, up, down, up, down. Look at this, the new 30-day bottom, 30-day top. I love a 30-day top to a 30-day bottom because what's happening next? Hypothetically speaking, this is not guaranteed, but hypothetically speaking, remember the seesaws when we were little? Down, up, down, up. Well, down, now she should be going to the upside. I like 2 days to the upside. Today is 1 day to the upside. So I'm really interested to take a look at this thing first thing tomorrow morning. Because if this thing tomorrow morning shows 1 more day to the upside, well, coming off a 30-day top and a 30-day bottom, yep, to the up. Yep, to the up. So, if that's the case, the 135s going for 285, I'm losing 45 cents right off the bat, so I'm walking away with 240. Okay, my calculator, clear, $2.40 divided by the purchase price of $135 divided by 135 gives me a grand total of 1.77% for the week. Well, I like Clorox. It's over 100 years old. Got the dividend coming up soon. Okay, those two good things right there. And she's, move that out of the way because you can't really see it, that being in the way. Okay, we got a 30-day high, our 30-day bottom. You can only have one 30-day high, one 30-day bottom, because at 139 and 129 is a $10 difference. Not quite 10%, because 10% would be $13. This is only $10. Hi, Mary H. Mara. Mary, how you doing over there? So, my opinion, just my opinion. Okay, whatever I say, don't take a damn word I say to heart. Do your own research. Rule number one, should be a question you should ask every single time you think about buying anything. Number one, do I like it? Can I see myself buying it and holding it for a long period of time? Clorox has earnings tomorrow. Woohoo! Well, alrighty then. Now, I don't pay attention to earnings, but I do it anyway because I'm just weird that way. All right? Because the company's 100 years old. They've increased their dividends for more than 5 decades. That's every year, not every once in a while, every single year, higher and higher. So the question is, why isn't it on your list? May not find it sexy or attractive, but if I can get 1%, I really don't care. That's all I'm looking for, just one. 25 more questions, and we're almost at 11 o'clock. Albert, come on, Albert. You got to be new here. Tesla's a no. You look like Michael Burry. Awesome. I have no idea who Michael Burry is. But I get that a lot, so I'm wondering if it's okay. Thanks for that, 86. All right, Coca-Cola consolidated. Really? Not quite sure what that means to us, because Coca-Cola never really gives any decent premiums. Yeah, Coca-Cola is going to be a no. Sorry, I don't do the thing, and I've already told you that. What is that? That is. See where it is right there? That's the high of the year. I don't buy at the high of the year. Wait for going higher. No, I don't do the thing. Ooh, I should make that as a t-shirt. I don't do the thing. You know, brighter, smarter, higher. Yeah, no, I don't do that. Because you don't make your money buying high and waiting to go new territory where it's never been. Adam, Wells Fargo. Ooh, nice one. Wells Fargo, WFC. I like Wells Fargo. Don't get me wrong, I like Coca-Cola. It's just not this week. Okay, so I got to change my saying from that's a no to not this week. What's up, Adam? All right, Wells Fargo. First thing, high, low, was, is, where's it going, blah, blah, blah. Great. Now, what are we walking away with? If I'm buying it for $60.05, see, $60.05, I sell the 60s, that's 52, not quite 1%. So that's a tough question. I love Wells Fargo, and I usually always buy Wells Fargo. But this time, all right, we got our high over here. So the high of the year is 62.59. She drops down to here, shoots back up. Last 30 days is not giving me a warm fuzzy. Look at it, okay? Here's where we were 30 days ago, 58. Jumps up to 61, not a big move. Here's your 30-day bottom here after a gap down. Remember I tell you gaps have a tendency to fill? Well, this one filled. Now she's kind of going sideways. She's coming back to the downside. No real rhyme or reason to this. Not giving me 1%. No, thank you. Simple enough. It doesn't have a distinct pattern. Okay, the low's down here. The high's up there. It's closer to the high than it is to the low, so it's going to be a no. Way to go there, Mr. Adam. Don't get me wrong, I do love Wells Fargo. I have bought it many times this year. It's just a no this week. Okay, now we look at Wells Fargo all the time, so I'm not too worried about it. Bolsar, this is Michael Burry's brother. Yeah, my brother Michael. Yeah, he's live every night teaching it. All right. Annex. So, as I understand, we are making covered calls and money deep, so we're not afraid as the stock moves down. Basically, yeah. All right, CP, $6. I have no idea what that means. Albert, this is like the second or third time you asked me to look at Tesla. I'm going to say this slow and enunciate my every word. Mary, what do I think about United Airlines? We'll take a gander at it. But right now I'm chatting with Mr. Albert. Because Albert, I do not like Tesla. Tesla does not have dividends. They have plenty of profits, but they take those profits and put them back into the company for capital appreciation. So the stock goes higher and higher and higher. And you basically get nothing, nothing, and nothing until you sell it. That's called capital appreciation. That's not what I'm looking for. I am looking for weekly cash flow. So I'm retired, and this is what I do to supplement my retirement income. Because I'm too young to collect Social Security. And I don't even think Social Security is going to be enough to pay my cell phone bill. It ain't that big. But anyway, my little nest egg, yeah, 1% per week is just perfect for me. All right, so Coca-Cola is a no. Tesla is a no. I missed a bunch of questions. All right, United Airlines. All right, excuse me, sorry. United Airlines. Alrighty, first thing, always first thing. High, low, where was it? Where is it? Blah, 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 where it's going. Okay, interesting. Okay, I want to take a closer look, but before I do, what do the numbers look like? Well, the numbers look like 45.72, the 46 is going for 79. Nice, that's over 1.5%. Well, yeah, 1.5% per week is over 55. Well, over 60-something% per year. I can do that. All right, United Airlines. A year ago, 53.96. Bottomed out end of October at 33.76. Topped out in middle of May at 56.18. But look what it's done for the past couple of months. Okay, high, low, where was it, where is it, what direction it's going. Okay, down, up, down, up, down. Ooh, I want to take a good look right there. Okay, so that's the last 90 days. Let's get a little bit closer. All right, Dylan, you want to take a look at Starbucks? We'll take a look at that in a second. Way over here, 90 days, 30 days, last 30 days. Okay, so the way it looks to me, all right, down, gap, see that big gap? Well, it fills a couple days later. There's our 30-day bottom right here. It looks like, what date is that? The 11th, July 11th. Okay, from there, a week later, she goes from 43 to 49. That's $6. That's what, 12%? Well, 12% is something I'd grab. So she drops down, shoots back up, drops down, shoots back up. Now she's going to the downside. So this is another one of those companies we're going to be putting on our list to keep an eye on. Because as soon as she finds the bottom, which I'm suspecting somewhere around here on 44, because that's what it looks like. Is that guaranteed? No, not at all. Now, one thing we haven't looked at tonight is the seasonality. That's another chart that I like. And for those of you who have no idea what seasonality is, well, how does the stock react throughout the year? Winter, spring, summer, fall. Okay, my far left, January 1st. Far right is December 31st. The blue line represents the movement for this year. Okay, here we are right here at the end of July going into August. So the red line up there represents 10 years of movement, average movement. So 2014, 2015, 2016, 2017, 2018, so on and so forth, for the last 10 years. This is what the average movement is. So what does it normally do this time of year? That's this area right here. So I want to zoom into that and check that out. Okay? So basically, it looks as if she might dip a little tiny bit and then go sideways for the rest of for the next 2 or 3 weeks. Okay, I'm good with that. This does basically exactly what I want it to do. Go sideways. All right, so for the last 30 days, it does look like it's coming to the downside. Okay, so I would like to wait and see where the bottom is and have it turn around and go back up. That's what I want to see. Okay? All right, so let's take a look. What do we have next? We got 17 more questions. Starbuckies. Let's look at Starbuckies. I actually own some Starbuckies. Ooh, nice jump. Nice jump, like that. All right, so high, low, where was it, where is it? You see all that? Okay, high, low, where was it, where is it? What direction is it going? Thank you, sir. You're welcome. All right, so Starbuckies, 78.10. The 78s are going for 127. Take off that 10 cents. I'm still walking away at 117. That's still over 1%. Probably close to, just a little bit under 1.5%. Okay, that works for me. Oh, sure. I've been watching for a few weeks. Seems real. You run, hold, risk through every time you sell. I'm not quite sure, CP, what we're talking about there, but okay. But we're looking at Starbuckies. All right. What stock is this? Well, at this moment, we're looking at Starbucks. We did Clorox already. Did you stay glued to your computer all day? Me? Hell no. I take a look at my computer for I do the podcast in the morning. Okay. For you guys who don't know, I do have a morning trading group. We do basically the same thing, except we are live, doing live trades in the morning. Okay? Now, while we're doing that, after that, I turn the computer off, and I'll turn it on for the rest of the day. Okay? I'm not on my computer all day. All right? All right. Let's take a look at Starbucks. A year ago, 108. Topped out at what did I just say? 101 a year ago. 108 is the high of the year. That was back at the end of November. The bottom was 71.78. I want to show you this right here. This is where I jumped in. Okay, I jumped in way up over here at 88. Okay, because everything looked great. How long ago was that? A couple of months ago. Everything looked great. Woke up the very next day. I bought it there at 88. Very next day, she drops all the way to 74, and I thought to myself, damn. I didn't get too upset about it because it's part of the game. You're going to buy something, next day it's going to drop. Also, you're going to buy something, and next day she's going to jump up. That's just the way it works. Okay? Unless your name is Pelosi, you're going to lose once in a while. It is what it is. All right, so last high was 89.77. Okay, the bottom. Oh, look at that, we got a new bottom. Okay, the new bottom is on the 17th. That's 71.55. So let's take a look at the last 30 days. All right, here goes the last 30 days. See that? She drops, retrace, drops again, retraces, back down. Now she's shooting up. This gap right here is going to fill eventually. Okay, it may be tomorrow, maybe the next day. But look, we have today a new 30-day high. So what do you think? 30-day bottom down here at 71, 81.30 is the top. That's a $10 move on a $70 stock. That's well over 10%. Of course, there's going to be profit taking coming up. Don't kid yourself. Okay? If I have a stock and I buy it and I see a 10% jump in less than 30 days, well, of course I'm going to jump on that because it ain't a profit until you take it. It's actually that plain and simple. Direct, right in your face. It ain't a profit until you take it. Okay? It's not a profit. And nobody ever went broke taking profits. Nobody. You don't go broke taking profits. All right. That being said, let's move on down the road. Yeah, now I own Starbucks, so I'm going to have to take a look at my positions and see how this affects it. We'll see. All right, next. Looks like a couple more questions. Elon, you like that? Elon is a no. AT&T or Verizon? Dan, nice pick. AT&T. AT&T is going to be a no. All right. Look what your high is. Look where it is now. Sorry, it's just a little too close to the high for me. Verizon, VZ. Not that it's a no. It's just not for this week. Okay, Verizon looks interesting. Look at the high, the low. Where was it? Where is it? I'm a little bit intrigued about this right here. Okay, take a close look. Yeah, I want to see closer to that. Great. All right, so numbers. $40.60 per share. Okay, the closest one's going to be the 41. It's paying 21 cents. No, sorry. The 40 go for 72. Once I take the 60 cents off there, I'm walking with 12 cents. Yeah, no. So the numbers aren't working for Verizon this week. Now Verizon's on my list, and yes, I bought Verizon many times. Now you will notice the more you do this, okay, your purchaser's price here, your strike price is here, this is your profit. You will notice that every once in a while you'll get a good week, you'll get a good fill. Every once in a while you'll know, it just doesn't look right. It was good a couple of days ago, not so good today. It changes all the time. How about Dollar Tree? Ooh, DLTR. DLTR. Interesting. I like the chart. The numbers 105.40. The 105s are going for 182. You take your 40 cents off of that, so you're walking away with 142 on a $105 stock. Okay, well the numbers are there. 1%'s there. Now, one thing about Dollar Tree is I don't think they have 20 years of increased dividends. DLTR into what do you call this? What are we calling this? Yahoo Finance. Okay. Can that be right? Historical data. So we're looking at what's called the data stream. Yahoo! Yep, Adam, Yahoo. This is the data stream. What we're looking at is the date, the open, the high, the low, the close, the adjusted close, and then the volume from now until they first opened. It's the data stream. Okay, what am I looking for? Well, I'm looking for dividends only. Okay? There are no dividends in this selected time frame. So what does that mean? It means Dollar Tree, that's a no. Sorry. Okay, if and when, it's not if, it's when the stocks go down, what am I bringing in? Well, I'm bringing in absolutely nothing. Because look at where she is. From 150, she drops all the way down to here. Okay, so what am I getting? I'm getting absolutely nothing. All right? Now, I could do spreads against it. Not spreads. I can do covered calls against it. But it goes against my principles. Okay, if the company's not how do I know if they're profitable or not? I'll have to go in and I'll have to read all the reports. I'll have to look. Yeah, I don't feel like doing that. I'm a lazy trader. Sorry, I'm lazy. There's certain things I just don't like to do. If the company's profitable, great. They pay higher and higher dividends to their shareholders. Now, why would I put my money into a company that doesn't share their profits? That doesn't make any sense to me. They don't have any dividends, which means they're not sharing their profits. They're taking the money and then putting it back into the stocks and waiting for the stocks to go back up through appreciation. Well, how's that working? Look, $1.50 back in March. Now it's at 104. That's almost a $50 drop. Wait a minute, what is it? 151. It dropped all the way down to 101. That's a 30% drop, and they're not paying dividends. So what does that tell you? And look, a year ago, 155, and it dropped all the way down there. Yeah. Okay, so she loses 50%, and then she went from 100 to 150. Then she goes up 50%. Then she loses 50% again. And it doesn't share its dividends. It doesn't even have any dividends. So it's going to be a no. You got to watch The Big Short. I've already seen The Big Short. I took my first steps and bought your book. Dirt Naps Angel. Okay, that's cool. Thank you. You know, there are videos to go along with those. I think you can find those online on YouTube. Should be. For most of them, I think. But thanks for that. Laurie. Yeah, I've written 14 books so far. Book number 14 is probably the best one. I just recently finished it. You would think it's up for sale yet. I finished it like 6 months ago. I'm stuck in that, what do you call that? Procrastination? Okay. Yeah, I gotta put it up. Broadcom. Broadcom's not on my list. That's a no, CP. You got that right. All right. Where was I? I bought the books on Amazon. Yep. Yeah, you know what? I probably should put my books for sale on my own website, which I'm going to do. How does someone get to watch your live morning show? Oh, Dan, you actually have to be a member of that. You do that, you come to the10minutetrader.com. There it is right here. The10minutetrader.com. The link should be in my bio up over here on the left. Okay, you can DM me there. Now I do tell people, send me a DM, send me your phone number, I'll give you a call, we'll have a chat. If you're serious about trading and you want some advice, or you just want to chat about trading, fine, give me a call. I talk to lots of people. Okay, very first page, live trading online. You click on that and that'll take you to Patreon, Dividend Stock Talk. That's me. Okay, look, it looks just like me. See? All right. Anyway, let's go back to where we were. Oh, wait a second. Yeah, you can do that. Whoops. Okay, you can either do that link there, or if you slide down, it says live trading, join our morning trading group. It's there also. Where were we? All right, here we go. So DLTR, as great as you may like it, as you may think it is to be, I have 300 companies in my roster at the moment. Okay, one that doesn't fit the parameters, I really don't feel like adding it to the list. Okay, last 90 days, last 30 days, look at this, last 30 days. Okay, she's up, down, up, down, up, down. Now she's going to the upside. Is it? Today was a down day. Okay, got bottom here, she goes up, but today it's pulled back. No real rhyme or reason. This one, you're going to find it every once in a while. You're going to see a chart, you're going to look at it, you're going to think, where the hell is it going? Okay, high was 30 days ago. 30 days ago, she drops. There's your 30-day bottom. What happens after the 30-day bottom? Well, she jumps up again. And it gets close to the 30-day high. Okay, what happens there? Well, it gets profit taken again. Gets close to the 30-day bottom. Shoots back up. Back down. Now she's going back to the upside. What's my thoughts on XRP and its future? You know, wow, I'm trying to read that. Olui Consulting. Okay. XRP is basically one of those, what do you call them? Cryptocurrencies, is that right? XRP. Yeah, Ripple. Okay. Yeah, that is a cryptocurrency. I'm keeping my eye on the cryptocurrency market. The reason why, I'll keep my eye, I'm not doing anything, okay? I'm only going to jump in once it becomes legal tender. Okay, so once I can take my little phone and go down to Starbucks and say, hey, I want a coffee and I'm going to pay you with cryptocurrency. And they're going to say, okay. Or they're not. At this moment in time, they're not. So it's a no. So although it would be great, because cryptocurrency is awesome, it gets the greedy little fingers of the politicians and the banks and anybody who wants to screw you out of the pot. You know, too many fingers in the pot. Yeah, you're getting rid of the government oversight, not keeping an eye on every penny that you spend, not taxing the hell out of you. Well, they don't like it, but it's great for the public. Our debts and our way we spend our money, nobody's freaking business. How I spend my money is not your business. How I spend my money is not the government's business. How you spend your money is nobody's business. So cryptocurrency, well, yeah, they can track it, but they track it through accounts. And I don't know how easy it is to hide your account. But anyway, it gets the greedy little fingers out of it. So it goes from person to person and bypasses everybody. Yeah. When do I sell and take my profit? Max Tassie. Maxi, that's a Maxi Tasty? Cool. Maxi Tasty. Interesting. All right, so Maxi Tasty, when do you take your profits? I can't tell you that one. But I can tell you it's not a profit until you take it, because whether you see a stock go up 1%, 5%, 10%, 20%, okay, that's not profit until you sell it and you take the profit. Now, nobody ever went broke taking profits. I don't know what you're thinking, but hey, more power to you. Okay, so Next couple questions. Ooh, we're almost done. I want to multiply my money as quickly as possible and as much as possible. What would be 5 best? Okay. You're definitely in the wrong place. Sorry. Point blank, I come for the generation, no holds barred, don't really care about your feelings. Sorry. But you're definitely in the wrong place. This is slow. This is boring. This is monotonous. I don't see why anybody would want to do this. 10 or 15 minutes a day to do what, 1% a week? That's crazy. Okay, if you want big bucks, you're in the wrong place. Sorry. This is 1% week. Safe, predictable, consistent, 1% per week. It's only 50% per year. You're looking for more. You're in the wrong place. All right, but I do like cryptocurrency of the future. Brian, thoughts on F? I actually have some Ford. So, Ford, here we go. Ford Motor Company, tra-la-la. All righty. First thing I want to look at, high, low, where was it, where is it? This gap right here interests me. Why did it go from here down to here? I want to take a look at that. But before we do, let's look at the numbers. 1088, the closest one to 1088 is going to be the 11. Ooh, 1%. Cool. All right, so I get my 1%. Wonderful. A year ago, we're sitting at 1304. Okay. Bottomed out at 962. Yep, 962. And here's the top right here. What was that last week? 1487. Then a big, huge drop. Now, check this out. 1487 down to 1082. That's a $4 drop on a $14 stock. That's a little bit less than 25%. A little bit less. Okay? That's a big drop. So, this gap right here, okay, that gap right here is going to fill eventually. I have a bunch of Ford. When I saw that drop, I said, oh, hell yeah, I'm jumping in. The company's over 100 years old. They didn't take any bailout money from the government. Okay? No charity there. Okay, they've been in business over 100 years. Okay, they've seen a lot of crap in the last 100 years of the economy, and they're still in business and still doing fine. Great. So what do the numbers look like? I'm walking away with 1%. The last 30 days, okay, 30 days ago, we're at 1267, topped out at 1489, a big gap to the downside, and we're still searching for the bottom. Now, as soon as we find the bottom, well, I might want to double up, because you're going to make your money in the stock market, buy low, sell high. Well, just to let you know, Ford, 100-year-old company, we all know who they are, okay, hasn't seen this bottom, has seen this low in quite a while. It is the 30-day bottom. You can't get any lower than the 30-day bottom for the time that we're in, because there is no such thing as yesterday, because it's history, it's a memory, it doesn't exist anymore. The future is nothing more than a promise, but where are we right now? We're right here, right now. Okay? I like Ford. All right. What's your thoughts on XR? Okay, dude, you've already asked me that 4 times. Please stop asking. Laurie, do you set notifications on TOS in case it jumps before expiring? No, not really. I've been playing this game long enough that, when I buy a stock and I sell a call strike against it, the covered call, if the stock spikes and somebody buys me out, fine. I really don't care. And I don't know how to say it any plainer and clearer than I really don't care about the stock going from here to there. I'm not looking for capital appreciation. I'm looking for the stock to have stability. I'm looking to find this bottom, turn and go back up. Do I care how it goes back up? No, I don't. I just want to know that it stopped falling. All right? You remember the question they had? No, I'm not even going to do that. Okay, but I want to find the bottom. When I find the bottom, great. Turn around and go back to the upside. Wonderful. All right, Johnny Ringo, you actually want me to say something? No. I don't give advice, and I don't give tips. I'm just reading the numbers. Okay, anyone can see that this is the high of the 30-day period. This gap is right here. And if you know anything about trading, gaps have a tendency to fill, which means well, the stock is going to come back up again. It's a 100-year-old company. Right now, the price is at 1082. The book value, I believe, is somewhere in the 14s. So you can buy it for less than the company's worth. Because what's the book value? The book value is you take everything that company owns, everything. You know, the desk, the chairs, the papers, the pencils, the crayons, the erasers, the paper clips, everything they own. You liquidate it and sell it. That is the liquidation value or the book value. So if they liquidated, you buy at 1082 and the book value's in the 14s, well, you're making $4 right off the bat from doing absolutely nothing. PBR. What the heck is PBR? Now, when I say that, PBR. Oh, okay. When I say that, it usually means something to the effect of, I don't have any idea who they are. Holy cow, look at that movement. That like jumps out at you. Up, down, up, down, up, down, up, down, up, down, up, down, up, down. Jumps out at you. So by looking at this, okay, up, down, she should go up next. Should. But PBR is a British oil company. PBR into Yahoo Finance. Yeah, we looked at this one a while ago, and we found that the dividends are all over the place. Okay, that doesn't make me a happy camper, but it has over 20 years of dividends. Now, I have 20 years of dividends, not 20 years of increasing dividends. There's a big difference between the two. Let me read you the numbers, and I'm going to read them in chronological order. From March 21st, 2001. The very first dividend they paid out was 30 cents. All right, great. The very next one they paid out, 2 cents. How do you explain that to investors? We got 30 cents last quarter. Why are we only getting 2 cents this quarter? All right, so let me read them to you. It's kind of disappointing. 30 cents, 2 cents, 23 cents, big jump. 6 cents, big drop. 6, 11, 25, 19, 26, 21, 21, 27, 47, 23, 17, 28, 29, 18, 12, 80, 29, 34, 22, all over the place. Seriously. And then we get down here, 2018. Okay? Wait a minute. 2012, 4 payments. 2013, only 1 dividend. 2014, only 1 dividend. Nothing for 2015, nothing for 2016, nothing for 2017. That's a big, a big red flag for me. Okay? But from 2018, they have 3 cent dividend. Wow, they were in the 20s, 30s, and 40s a couple of years ago. Now you're down to 3 cent dividend. That's not a profitable company, in my humble opinion. Okay, 3 cents, 5 cents, 3 cents, 10 cents, 9 cents, 29 cents, 62, 117, 122, 147, 219, 47, 55, 43. Now we're down to 41. What the hell? You know what? I'm not even going to. Okay. There's no consistency with the dividends whatsoever. All right. So PBR is going to be a no. Because they're not consistently profitable. It's like giving your money to someone. Why the hell? Why? No, never mind. Let's look at something else. I wouldn't put my money someplace where they're not consistently profitable, and I don't see why people do it. What the hell are you thinking, giving your money to someone that's not profitable? PBR's a no, Josh. Hey, fascinating football videos just get here. Of course, there's like 5 minutes left. He always shows up at the end. All right. I always thought Dollar Tree was Dollar General. Ooh, big difference. Big difference. Dollar Tree, no. Dollar General, yes. I like Dollar General. Kroger, we looked at Kroger earlier, didn't we? Yeah, we looked at that this morning. Okay, so she wasn't here this morning, so we'll take a look at this. All right, first thing, chart, high, low, where was it, where is it, where it's going, okay? current price, 55. The 55s are going for less than 1%. Why would I do that? All right. A year ago, 48.59, bottomed out at 42.16, topped out at 58. Not a big range. I mean, it looks like it's bigger, but no, not a big range at all. Okay, so from the high, here we go, big drop. You have a 90-day bottom at 49.10. Okay. Yeah, she's too close to the high at the moment. Look where she is. Okay. That's not even last 30 days. Here's the last 30 days right here. Last 30 days. 30 days goes to the bottom. Okay. Look at your top. I'm going to read these numbers to you because you can't really see them very well. The 17th, 54.98. The 18th, 54.97. The 19th, 55. Monday, the 22nd, 54.97, 54.85, 54.81, 55.20, and 54.92. So it seems to have a very difficult time going over 55. That's what you call resistance right there. And it's too close. Sorry, Kroger's, no, too close to the high. Kroger's not this week. Okay, I like Kroger. I have bought Kroger in the past. People must eat, and CAGKHEHRL are food companies to buy, blah, 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 blah. Okay, interesting. Not quite sure what that means, but alrighty. Chevrolet, how are you today? How do I like energy transfer? Energy transfer. Now, what's there a reason why we said no to energy transfer earlier? Yeah, too close to the high. Okay. See, month ago, up, down, up. There's not very much more to go, in my humble opinion. Okay, 1632. The 16 is going for 35. It's over 2%. Energy transfer. What do they look like for dividends? Yeah, not bad. Okay. Not consistent with the increase, but it does have some nice increases. Okay. Yeah, because I remember we were looking at the 31. All right. So for 3 years, they didn't increase. So energy transfer's okay, not hugely high on my list. Jose, you want to look at Did we already look at Walgreens? Did we look at Walgreens? All right, let's do Walgreens as the last one of the evening. Because I like Walgreens, and Walgreens has been very profitable for me. Now, if you look at Walgreens, I got a lot of crap by following Walgreens this year. Because people are saying, it's a loser, it's going down. Well, it's been going down for the last 7 years. Okay, at some point in time, there is a bottom where people say, all right, it's worth a hell of a lot more than this. And actually, the book value is a lot more than that. So even if they sold off everything and paid off the investors would make money if you bought it now. All right, let's take a gander. High, low, where is it, blah, 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 all that kind of nice, neat, fun stuff. Yay. I actually have some Walgreens. Okay. So, $11.95, what the price is, I can buy it for tomorrow morning. See right there, the ask price, $11.95. The 12s are going for 25 cents. You know what that means? That's a 2% trade. But here's the question. Do I like Walgreens? Now, you see this bottom right here? On the 9th of July. Okay? The 9th of July. Now, you got to make your money when you buy low and sell high. Now, in January, this thing started to drop and drop and drop and drop. And people kept saying to me, James, why are you looking at Walgreens? It's a loser. It's going to go, yeah, whatever. It's over 100 years old. They got 8,700 stores. There's a Walgreens in every major city in the United States. Great. Well, here it is right here, the bottom of a 7-year decline. So it's been dropping for the last 7 years. And there's the bottom right there. We just found it. Okay? As if it was lost, it just popped up. Okay? Up, down, up. So from the 30-day bottom, Here's your 30-day top over here. Yesterday, not today, yesterday. So what's going to happen here? It's going to come down. More than likely. Okay? Goes from $10 to $12. That's $2 increase. $2, really? Well, $2 on a $10 stock is a 20% increase. I don't care how you look at it. Stop looking at the numbers. Look at the percentages. From $10 to $12 is a $2 increase. Okay, $2 of a $10 stock is 20%. But it's only up $2. No, it's up 20%. Huge difference. Okay, people want to see, you know, hey, let's say you buy a stock at, hold on a second. Oh, never mind. So anyway, that's Walgreens. It's 11:30. I'm going to answer the last few questions, and that's going to wrap it up for the day. Abraham, how are you today? Oh, Baram Ahmadi. Okay. Dude, I thought this guy was Tony Hawk. Oh, yeah, all right. How do I DM you? Laurie, top left corner of your screen, okay? Top left corner of your screen, there's a little picture of me. It says Dividend Investing for Weekly Cash Flow. If you click on that, that will take you to my bio, which gives you all the information about me, okay? Now, be careful, there's 20 somewhat other people pretending to be me. This means people must eat blah, 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 blah. All right, hold on a second. I gotta address this one. Anthony Michael, this means people must eat and feed their families like KHC's pays $1.60 in dividends each year. CAG and Hormel both over $1 dividends each year. Okay, Michael, yeah, you're right, but I'm not 100% sure what that means about what we're talking about. I honestly don't care about the dividends. Seriously, I don't. I don't care about the dividends, and I don't care about stock appreciation. Don't. Honestly, don't care. What my concern is, my concerns, I have a few of them. How consistent are they with increasing their dividends? Short story, okay? Very short. If it's profitable, they share their profits. If the profits keep increasing, they must be doing something right. So if they're increasing their profits every single year for 20 years, that means they're getting better and better and better and better. That's just logic. Okay, so if a company consistently profitable, great. That's what I want to concentrate on, those companies. Well, alrighty then. Do I care about catching the dividend? No, I don't. What do I want to catch? I want to get this right here, the premium. All right? If I could buy it at $11.95 tomorrow morning, sell somebody the right, sell somebody the right to buy it from me anytime between tomorrow and the expiration on the 9th of August, that's next Friday. If I can get someone to buy it from me, I could make 2% for the week. Do I care about the dividend? No. I'll take it, but that's not what I'm looking for. I'm looking for just the premium. I'm looking to buy it, $11.95, sell it at $12, that's 5 cents. Big deal. I don't care about the 5 cents. I care about this right here, the 25 cents. Because 25 cents is 2% of the purchase price. And 2% per week is over 100% per year. And I'm perfectly okay with that. So Laurie, hopefully, or you know what, Laurie? Here we go. I'm going to do this. Reply to Laurie. Hi. All right, Laurie, I just DM'd you, so hypothetically speaking, you should get mine. All right, I missed some questions. All right, I've been waiting for 4 to drop for many weeks. I'm also here, Wade. I really should serve. PBR's a no. Okay, I was thinking you wanted dividend stocks. Michael, no. I already have plenty. Okay, I've been doing this for 20 years. I have over 300 companies that have all increased for the past 20 years. And the companies you rattled off, most of them are on my list. Patrick, he said no to serve. And no, I don't day trade. Brazilian oil companies, yeah, sorry. Picaris, what do you think? Picaris, Latin, I think it's a good short soon. Dilution's crazy, okay. You're amazing. Yay, Leo. Thank you for that. Look, I'm almost done. I'm almost done. Before you call it a day, can we check Kohl's for this week's calls? Oh, inspire me more. How are you? Yeah, we'll look at Kohl's. That'll be it. All right, we'll look at Starbucks. James, I feel... I missed that one. James, I feel like you make... I make some exceptions to increase dividends over 20 years, like Ford. Yeah, you're absolutely right. Ford's been in business for over 100 years. I don't see the problem there. Okay, companies that have proven their longevity, how they can stick to all the crap. Now, some of the companies you'll see are like Comcast. Comcast is only 64 years old. Okay, it's not 100 years old. It's only 64 years old. Wait, sorry, 60 years old, because it incorporated in 1964. They got 64 million customers. Okay, I make exceptions for them. I make exceptions for Ford. I make exceptions for Apple. I make exceptions for JD, Mara, and a few others. But you're right, I do make exceptions for some. Costco's going to be a no, too overpriced. Minty Fresh, thank you for your, and Sweet Dreams, yeah, thanks. All right, so the last one's going to be Kohl's. All right, Kohl's. Now, I do have some Kohl's, just to let you know. Okay, high, low, where was it, where is it, blah, 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 all the kind of nice, neat, fun stuff. The chart looks interesting. Let's take a look at the numbers. 21.98, well, we all know the closest one to that is going to be the 22. And the 22 is going for 46 cents. Now, that's over 2%. So here's the big question. Do you like Kohl's? And do you like Kohl's at 21.98? Well, let's take a look at the numbers, the chart. A year ago, 28.50. Bottomed out in the middle of October, 17.80. Okay, it looks like we have a triple top at 29.62. Okay. Once in August last year, again late December, and again in the end of March. Alrighty, well, past couple of months, interesting. Look at the big gap down. That should fill eventually. Wonderful, like that. Last 30 days, here we go. Now, pretty plain to see, but it looks like the run is over. Okay? I mean, think about it. We should have jumped in on Monday like a lot of us did. Now, we looked at this on Monday. I did buy some on Monday. Because what do I like? I like a 30-day bottom, 2 days to the upside, okay? Thursday and Friday, 2 days to the upside. Monday was the clue to jump in. So I did, okay? She's up Monday, she's up Tuesday, and she's up today. Okay, but it's going to run out pretty soon because look how high it got today. 22.50. Well, the high's at 23 something, you know? How much does one need for trading with this strategy? Father of Dragons, you're new here. How are you? I'm just getting ready to leave. I usually leave at 11:30, which is past now. I'm about to turn into a pumpkin. You're not going to like seeing that. It's not pretty. But anyway, you have to decide what's right for you. And for you, I definitely say, don't put any money in until you get good at it. How do you get good at it? Well, you play Monopoly. Same thing. You get what's called a paper trading account. Just follow along. Find good companies. Make sure you know what you're doing. Okay? Now, the trading strategy here, simple. Wait a minute. Simple, safe, predictable, and consistent. It was created for a 9-year-old. Have a good night. Thanks for all the... okay. I just deposited more, 2,000 more. Cool. All right. But still, practice with a paper trading account first. Get good at it in a virtual account. Monopoly. If you're good at Monopoly, great. Then buy some real estate. If you're good at trading stock with paper money, fine. Then do it. Don't put any money until you get it. Money finally settled in my TOS. I guess I'll just wait until next week. All right, inspire me more. Father Dragons, do you have to be able to afford at least 100 stocks of any given company for this? Cough just won't go away. You can do this with less with a strategy called Dividend Capturing 2.0. Now, for that, how many people do we got? Less than 100. So for that, show up tomorrow. Father of Dragons, show up tomorrow. Remind me of Dividend Capturing, and I will tell you, I will show you how to do the dividend capturing. It's simple, safe, predictable. It was originally created for the 9-year-old, my 9-year-old daughter. unless you're going to, unless you got a personal opinion, that's not financial advice for something to enter tomorrow. Yeah, all my stuff is just personal opinions. I'm not giving any financial advice to anyone. Okay? All right, Father Dragons, hope I see you tomorrow. I'll be at 9 o'clock, 9 to 11:30 every night. All righty. So, that being said, I hope you guys are all doing well. It is 11:41, a little bit past my bedtime. I'm going to turn into a pumpkin. Anyway, so you guys have a great night. See you again tomorrow. For you guys on the morning trading group, we'll see you in the morning. Remember the stocks I told you to keep our eye on this week, those ones teetering around the bottom. Okay? Reggie Joe Bo Jackson. You know what, dude? Okay, Reg. Okay, I got to tell you this because I get text messages from you saying this and that. Yeah, I can't text to Canada. Okay, you gotta text me on TikTok because I can send you information on TikTok. I just can't send you text messages on my phone. Thanks, you're welcome. Laurie, you're welcome, you're welcome. What stocks to remember? I forgot. Oh my goodness. I have no idea. That's why I told you guys to remember. It's all good. All righty. Yeah. Oh, also, I'm going to try to remember to send, morning trading group links to the Discord. Okay, for those of you in the Discord. I chat with you every morning. Yes, you do. Okay, so if you have any issues, I'm going to try to get, eventually I'm going to find me, a virtual assistant, someone that can help me out because, I don't know the technology. That's why I got like 5 or 6 cameras going. If I knew how to use the software, I wouldn't need 5 or 6 cameras. But it takes some of the fun out of it. And I kind of like the fun. Got to make it fun for me, All right, so you guys all have a great night. I'll see you again tomorrow. So, hey, you guys, Rick Finney and Paula Kenny, you guys have a great night. And Shalendra, I like that name. That's a cool name. Have a nice night. See you Monday morning. Won't be able to tune in for afternoons for a bit. Okay, that works. Imagine that. There we go. And now. There we go.